Okay, welcome back. We are doing a little long format Q&A for our buyer series. So we are going to revisit our episode 2, which has everything to do with choosing a lender. So as looking at it from a buyer's side, what are some of the essential differences between a pre-qualification and a pre-approval? And why do sellers often request a pre-approval with an offer, Kathy?
Okay. So pre-qualification and pre-approval are two different terms. One is actually a documented research on a buyer's ability to buy.
The pre-approval is, right?
So meaning approved, as in like they've looked at you seriously. Normally a pre-qualification is only maybe a credit check, like they quick pull your credit, but definitely not looking into your W-2s, your assets, your ability to make the down payment. They're not checking your bank accounts. It's just a credit pull. Those two are two entirely different things. Well, a credit pull.
And I've always, sorry to interrupt, but I've always been told that a pre-approval is almost just a buyer can go in and say, I make 100 grand a year. I have 50 grand in the bank.
Is pre-qualification.
Oh, I'm sorry. Did I mess that up?
Well, okay. Yeah. So here's the lowdown. Those terms are used interchangeably by a lot of agents. And what we're trying to tell you is that they are not the same.
Correct.
Whether they call it a pre-approval or pre-qualification, what we as agents are looking for when we get that letter is that there has been a deeper dive into the buyer's ability to buy. And that deeper dive is beyond just a credit check. It would that they've checked documentation for their down payment, because in some of these instances, people are putting down, $50, $60, $200,000 or more. We want to make sure that that's valid. Maybe that's a proof of funds. We also want to make sure that their W-2s or their source of income has been checked and verified. Also, maybe that they've seen the last 2 years tax returns. These are all things that the lender will need. If we have proof that they've seen all that, then we know that that buyer has really taken all the steps to be able to pull the trigger on that home that you're maybe showing them, or that you are presenting the offer to the listing agent on.
Yeah. And so I do think, again, really understanding the difference is key. And while some buyers, I know this video is more geared towards buyers, they're like, well, I don't want to go through a credit check before I find a house. That's something I hear often. I still think that if you're looking seriously, you want to be prepared to move on something, because real estate can move fast. And so if you're not in a place where you're doing that and you're more just looking for homes, that's fine. Just be prepared for some people to ask for that and maybe not be able to view a few homes, or you can just go to open houses and stuff like that.
Right. And I think that honestly, in terms of mortgage, it is a different type of credit pull for a mortgage than it would be for a credit card. If you wanted a, Tractor Supply store credit card, that's a different kind of credit pull, and those hurt your credit more. When you're shopping for mortgages, you can do, I don't know if there's even a limit on the number, but within a 30-day time period, a person is allowed to have their credit run several times without it dinging their credit, especially when it's for a mortgage related.
And so this really allows you to shop lenders, which is what we always recommend doing ahead of writing a contract. You want to have your lender dialed in and ready to go so that you have a relationship built with that lender, some trust, they have a good understanding of you. Because what it really does for you as well is it gives the lender time to really look into and think of specific loan programs that might be specifically beneficial for you, versus just being like, well, we're kind of under the gun, so we'll throw you into the conventional box and make it work.
Right.
So really important to not be afraid to go through the process. And again, takes a little bit of time, takes a little bit of work, but I promise if you're doing it up front, you will see the benefits later down the road, and it will be less stressful when it comes to making an offer, because that already feels like a pretty big whirlwind.
Yeah. I think the other thing is like, when you go to a lender, you might not have a house in mind, and they're going to tell you, hey, this is where you're at, but the numbers, it's a numbers game, right? We can work this around, and we'll get into this in our next video or a video or two down the road. But like, your buying power is different if you're buying a condo that has association fees versus buying a regular single family freestanding home. Again, getting in front of a lender and getting all your paperwork in front of them early will help you kind of determine what type of property makes the most sense for you to buy, which ones have the most buying power. And again, well, depending on what part of the country you're in and who you're talking to, what agent, pre-qualification and pre-approval are used interchangeably, but they are not the same thing. The reason that a seller might want or request a pre-approval or pre-qualification is because they want to know more about that buyer's ability to close on the contract.
And this will probably be the last thing I say on this, but keeping in mind for our area, again, not uncommon to have $1 million+ listings, or up to $10-20 million listings. A lot of times with those, you were having sellers specifically request a pre-approval letter prior to viewing, or proof of funds or verification of assets. And so keep in mind, that's not the agent that's making that request, although we might advise our sellers to do that for all of these reasons we're talking about. But if the seller requests it, the agent then has to ask for that, and thus the buyer's agent needs to provide that. And so again, really having, again, a few things in order can help you make sure that you're able to view the homes you want to see, so you can compare. And if you're considering buying, it's really something to be done anyways.
Yeah, absolutely. Absolutely.
So moving on, when you are interviewing lenders, what are some specific qualities or communication traits that you would recommend a home buyer prioritizes when interviewing potential lenders?
Yeah. I first of all, how when you just go to make the appointment with them, you're going to get a feel for, oh, well, I can't see you for 2 weeks till Tuesday, or how when you approach them, they're going to have a system in place. Hey, great, yes, I love to meet with new potential clients. Do you? I have time next Tuesday on my calendar. Please bring with you these things. Or I'm going to send you an email in 2 minutes that has a list of things I need you to either email to me prior to our meeting or bring with you, so that we can make best use of our time.
Yeah.
I think that the same is true with anybody you're dealing with, right? You don't want to go in and waste your time and, oh, how are you? And great, you have 4 kids and a dog. Awesome. That's not what you're there for. So anybody that can converse and can convey what you need to bring to them very quickly is probably somebody that's really well organized and has got a good system in place to make sure that they can help you as fast as you need.
I think for me, one of the biggest things I recommend my clients find is just somebody that they like. Again, you might not really know the person, but I do think you can get a big feel for them. And I know a lot of things are done online right now, which is fine. I'm also still a big fan. Schedule a time to go into their office, look them in the eye, meet them. If they don't have time for that, I don't know that that would be a lender I would work with, because I value having a relationship with somebody, right? Other people, it maybe doesn't matter. I know a lot of people are just like, well, I just want the best rate and that's all that matters. I would highly disagree, and I would highly disagree specifically for first-time home buyers. It can be a big, scary process, and you want to make sure that the person you're working with, um, you trust and you feel good about, because it's going to be a lot of new terms. And so I do think that. And then I also really am a big fan of, can you get them on the phone at 6 p.m. on a Tuesday night? Some lenders just keep bankers hours, which again, totally fine, whatever works for people. I personally want my clients to be able to get a hold of their lender, because if we're writing an offer late at night, which is often when it happens, you want to be able to maybe run some numbers with them. I would like to be able to figure out how to craft the best offer for them from the beginning. And so again, important for me to be able to get a hold of them. So that's why I do think having somebody who's accessible is really important. It just can help bring a sense of ease.
Yeah, I always I've told my buyers over the years, hey, consider this a come to Jesus meeting. So if for some reason that lender is talking down to you or sounds really kind of, using uppity terms or whatever that make you uncomfortable, that's probably not your person. If somebody can, this is a big deal. You are borrowing hundreds of thousands of dollars. You will owe this money. You will be making this payment for likely many years. Uh, you need to be comfortable with what they're bringing forward. And if they can explain it to you in a way that makes you comfortable and very understanding of what this is that you're going to be signing, that is what is most important. While rate certainly is important, most lenders are very competitive.
Yep.
There are different types of products that do different things for you. So being able to be honest about, man, I totally flaked on a credit card 4 years ago. Is that going to affect me?
Because they're going to find it out anyways.
Yes.
It's not going to be a secret that you can keep, because you get vetted very well, right? So being able to feel comfortable enough to share all of those details in advance, so that again, a lender, I often find when I send clients to some of my lenders, they'll even come back to me and say, oh man, I'm so glad I talked with Caroline or with Sarah, because they were able to help me see if I can just clear off this line of credit, I will be positioned so much better, and I can clear off that line of credit in 2 months.
And that's another reason why getting started early is a big deal. What if there is like, oh yeah, I co-signed for my brother-in-law's car 5 years ago. He doesn't, even have that car anymore, or he told me he paid it off or whatever. Well, okay, let's make sure that we've got the paperwork in place that doesn't make it look like that's still a debt that you have. There's lots of reasons to go to a lender early, and they don't necessarily need to pull your credit if you're still concerned about that at the beginning phases, but they can take a look at what your credit score looks like and what your debts are, and that will help. Then the rest of it can kind of be added in a little bit later. But I think, yeah, it's a come to Jesus meeting. You need to be able to be really honest with this person, and if they give you a bad vibe, go find somebody else.
And so, kind of piggybacking off of that, I think the other question you should be able to really get an answer from a lender for is, what are your fees and what are they paying? What are they covering, right? So you should be able to ask, great, so you can get me this interest rate. What does that cost? Because sometimes an interest rate will have a fee baked into it. And so I think it's really important for you to understand the difference between buying a rate or getting a rate, and then what are the fees associated with that rate. And specifically in a lot of those fees, you want to know, what does the lender get paid? What are they going to charge you for a potential appraisal? And some of these might be a little bit of a price range, right? It might be between $800 and $1,500 for the appraisal. Maybe you won't know that until you're under contract, but you should be able to understand what fees are going to be associated with closing this loan. And I do think that should be very transparent. It can be really tricky. Lenders can often give you a loan estimate. And again, I've been doing this for 8 years. You've been doing it for over 20 years.
Yeah.
They're hard, even again, doing it for a long time. Sometimes they're really hard to compare because they make them look a little different. So even if you're getting some of the same numbers, I think being able to have a conversation with your lender about the numbers and have an understanding that way is the best way to understand what you're paying for.
One of the big things is when you get to a certain point, there'll be like a cash to close number. And if that number seems substantially bigger than your down payment, that's where you're going to see a lot of like processing fee and I held your hand for the first 2 hours fee and like weird stuff that is where the lender makes their money. But they can be really big in some places and they can be really small or even waived in other places. Sometimes banks will have like a no processing fee for first time home buyers or something like that. So a lot of times when it kind of does that, where you have that cash to close and you're like, wow, I was putting down $10,000 for my down payment, but it says here I need to bring 15 to close. Whoa, what happened?
What happened?
Right?
Yeah.
Like that's one good place to kind of check into that. So,
and again, lenders should get paid, right? Everybody gets paid for the work they do, and if they're professional, that's very much part of the job. But I think you, as the buyer, should have a clear understanding of what you're paying for and what those fees are, just like you do with your realtor, right? You should understand how and where we get paid.
absolutely.
And so, how do factors like credit score, debt to income ratio, your employment history directly impact the amount of money a buyer can ultimately borrow, Kathy?
Yeah. So, and these are definitely lender questions, but overall, I think this little mix of very important things like credit score, debt to income. So you can have a great credit score, but you can have, because you pay your bills on time, but your debt to income ratio is really high, which means there's not a lot of give in there for any eventualities, the furnace goes out or anything like that. And that makes a lender very nervous. So they don't really like that. They like a better gap between debt and income. Uh, but again, that could mean you have a great credit score. So you walk into the lender saying, "Oh, I've got a 790 credit score. This shouldn't be a problem." But they find out that you're after all your bills are paid every month, you have $40. That's not going to be great.
Well, and most importantly, it doesn't allow for any additional debt, which is what a mortgage is, right?
Well,
so if there's no space for that to add more to the mix,
right.
It just doesn't really matter how much money you make.
Right, exactly. And I think, you know, employment history is important because they want to know that you'll be able to pay the loan over a long time. If you've got a varied employment history, or you just started a new job, or people like Kayla and I that are 1099s,
started your own business,
right? We have to even though I was doing the same job when I moved here to Bozeman, they wouldn't, it was going to be very difficult for me to buy a home right away because I have to show 2 years experience in this market, not just as a realtor. So there's a lot of intricacies in that, but they want to know that you have solid income if they're going to lend you hundreds of thousands of dollars.
And keep in mind, a good lender to me can work with any situation. So again, don't be afraid to ask all the questions and give them all the info, because I think if you're connecting with a good lender, they will be able to either help you right away or give you a roadmap to get to where you want to be within the next couple months to maybe a year or two, depending on the situation.
Yeah.
So don't be afraid to, again, reach out, chat with somebody, and be honest with them from the beginning so that they can help you come up with a really good plan.
Yeah.
And so why do you tend to recommend local lenders over, let's say, somebody from Rocket Mortgage or large branch Wells Fargo or something along those
Yeah.
lines?
Quicken loans.
Yes.
Well, first of all, their ability to know the market and work with the agent directly, it just helps us. They're going to be asking for things. They're asking you about your finances. They're asking us about the property. So when
It really is a team effort to get a house closed amongst lender, realtors, buyers, and sellers.
yeah, absolutely, we're all working together. So when that person has never been to Bozeman, doesn't know why, how could I don't know, how could a 1 bedroom, 1 bath condo cost 1.2 million?
Yep.
Like, I can't believe that in Bozeman. Well, it does. And that's the way it is. And here's why, and here are the comps. Not that we necessarily have to share comps with the lender, but it helps them. They know the local market. They know what they need to tell their underwriters who might be making those questions to them. Also, local lenders usually have a much tighter relationship with underwriters, who are really the people. The lender grabs the paperwork, the underwriter looks at all the paperwork. So when you go to a bank and they have in-house underwriting, that's great. We've got a problem. Hey, all of a sudden there's $5,000 in the bank account. Oh yeah, grandma gave that to me. Okay. Well, then that underwriter will say, okay, well, we need a letter from your grandma that says it was a gift, not a loan, or, whatever. But having that closer connection to an underwriter is really valuable when things get sticky. And that usually would happen in a local bank, or a local lender who understands the market is able to work those things far more quickly and solve those problems
quicker and more efficient.
Yeah.
So we just want to keep all those timelines moving ahead, because you might maybe have given notice on your current lease or your other living situation. Maybe you're selling a home and buying a new one, right? Timelines really are pretty important, and occasionally you can mess with them, but really a good idea to try and keep them whenever possible.
Yeah.
I think the other thing with working with a local lender, one of my favorite reasons is having local lenders have a better relationship, or are better known by the appraisers, who are, of course, local. And I think when a lender, appraisers are often, when your lender requests an appraisal, the appraisers, it just goes into a big pile, and then the appraisers get to pick which ones they want to do. And usually local appraisers will pick up local lenders more often, more quickly, because they know how they want their reports, because they do so many of them. It's a more predictable thing. Whereas occasionally, if you're working with a larger bank, the appraiser will pick it. Maybe they'll do the report how they usually do, and then that lender will say, hey, we really need it this way, and it's just a bit more of a headache. So we typically find that those appraisers tend to pick up local lenders more quickly as well, which again is in your best interests. Let's see. So
what else you got, Kayla?
We want to talk about, I guess, just kind of going back to that gut feeling.
With the lender.
To wrap it up with your lender, why, I mean, it's so hard to talk, not hard to talk about, but hard to really put a specific thing on. But why do you feel that working and listening with that gut feeling is so important in choosing lenders?
Again, I just feel like if you walk into somewhere and you want it explained to you, and there's a lot of situations in life these days. Let's take it away from real estate for a second, but you go to your doctor and you say, my toe hurts, and they say, oh, well, take this medicine. personally, I'm like, why should I take the medicine? What's gonna
Did you even look at it?
right, right. Versus like when you've got a lender and they say, okay, well, this is what we're gonna do for you. Okay, this is how much money you have, and I saw this, and so this is what we're gonna do for you. And they don't say, we're gonna do this for you because this isn't perfect and this will be too expensive. And so I think that this is the best for you. And don't ask for your agreement, then it's kind of getting shoved down your throat. When you have a good relationship with the lender and you can communicate with them back and forth and feel free to express any concerns, that's the person to choose. You know, I don't know. In my family, my dad was the money guy, right? And in some other families, sometimes it's the mom or Aunt Betty or whatever. But if you don't feel like you're talking to the person that you would trust all your money with when you go to a lender, it's probably not the right person. So
And somebody who really has a true grasp of, number one, I would say our real estate market. Number two, the loan options, because there are so many different loan types. We touched briefly on some of the major ones, but there's hundreds of loans. And a good lender is going to have relationships with different people to get different pools of money that are available to different types of buyers. So it really isn't just a one size fits all or a five size fits all. There's so many different nuances, and when you're working with a truly capable, competent, and experienced lender, they're going to be able to, again, look at you as the whole picture, look at the house, and then understand what loan options they have and piece something together that can really be customized, um, and work really well for their clients. So
yeah,
that,
I think probably like choosing a lender early and that you're comfortable with are probably the two biggest, like,
when I meet with a buyer, I ask them, are you currently working with a realtor? Have you spoken with a lender? That's how important it is.
right.
I mean, obviously, we're going to go look at houses and I want to know what they're looking for in a home, but I do feel that passionately about getting ahead of this so that you don't have to make a decision when you're trying to get your dream home or trying to go after a place that maybe has a lot of activity. It's just not when you want to be under more pressure. So,
Or make a hasty decision.
exactly. Yeah. Make a hasty decision because you just want to get the house. You don't worry about the lender. You just want to get the house.
Yeah,
So,
yeah,
that is all we have, I think, for choosing a lender.
yeah.
Do you have any last minute
No, I
tips?
think
But
I think that's it. Just trust your gut, and I think that you'll probably do pretty good. While it's tempting to go with like a Quicken Loans or something like that, ultimately it will not be easier, and that's from an agent that's worked with a number of buyers. That they thought Quicken Loans was the way to go, and then Quicken Loans got unresponsive, and they missed their opportunity.
and that's what I'd say. Trust your gut, and then ask your peers, right?
Mhm.
Friends, family, who have they worked with, who have they loved. Ask your realtor, right? A good realtor should be able to recommend a number of different lenders, and then again, the final decision, of course, lies with you.
So I think our we'll lead you on to our next part, which is a little bit more about buying different aged homes, and we'll move on from there. But thanks again, and please subscribe and like, and we'll have more information for you soon.